Welcome back. Markets are doing well, and let's focus on a couple of earnings. Dabur has reported a largely inline set of numbers in quarter three. To help us out with a quick analysis, we have the management who joins us on the show. Hi, sir. Good afternoon. Thanks so much for joining in. Could you tell us what's the targeted volume growth you're looking at for this year on the whole, for FY24 as well as 25? And also, what did you do so differently, Mr. Malhotra, in the past quarter to outshine the industry?
Hi, Nigel. Thank you for having me. And yes, the volume growth has been good. So we posted a 6% volume growth, backing around 7% overall revenue growth. And we want to maintain the same going forward. I think that's the outlook that we can give, because most of the price increases are already lapped over and no more price increases will happen in the balance of the year. So the growth will actually come in from the volume growth only. And we are driving the volume growth through our footprint expansion in rural. So rural, we've appointed yodhas, and those yodhas are opening up hitherto not covered villages for us. And we've gone up from 100,000 villages to 117,000 villages. Around 17,000 extra villages got added. And by appointing yodhas over there, our direct reach to outlet has also moved up by around 200,000 in the current year. So YTD, so we are the only FMCG company to have increased our reach by 200,000, which is the highest in the FMCG industry. That's why you see this industry-leading growth, and which is belied the contrarian number that people say that rural is sluggish and all that. But our rural growth has been 6%, while the urban is around 4%, averaging out to around 5% in the domestic business. So I think infrastructure building in rural is what we've done differently. Plus, we've invested behind brands. 36% growth in our media investments has gone in, while our gross margins went up and the extra gross margin was invested on investment behind brands on television and digital. Innovation has contributed to 3.5% of our overall revenue. So we are innovating and trying to premiumize our portfolio and increasing our total addressable market through power brands to power platform strategy that we alluded to earlier also.
Mr. Malhotra, good afternoon. All of that you described seems to be really working well, because this is best-in-class growth. I mean, we haven't heard this from too many FMCG companies in the last couple of months, right? 6% is a good number that I think the market will like. So let's talk about, the trajectory ahead for the next couple of quarters. Will these kind of investments in marketing and promotions, will they continue? And also, you alluded to volumes and the increased distribution in rural. What is rural telling you in terms of pricing? Is there any elbow room at all? Or will price hike definitely have an impact on volumes? What's the strategy? And how are you hoping to end the year, both on margin and on volume?
Yeah, so volume, I told you we want to maintain the volumes, Reema, going forward in the year. So we want to maintain around 5 to 6% kind of a mid-single to a high single volume growth going forward. And this volume growth should be driven by our continuous endeavors to expand our rural footprint and to expand our execution in the marketplace and gaining market shares and growing ahead of the categories. So what we've seen in the previous quarters is that rural was sluggish because of the credit crunch which was there in rural. Money is not coming in, and because of high inflation and the price increases, the wallet of the rural consumer was getting squeezed out. Now, because the price increases have kind of stemmed now, and the inflation is also stemmed, so money is gradually, slowly coming back to rural, and rural will bounce back going forward in the future. And I think with elections coming in, a lot of expenditure will be done by government also on rural. I think all that augurs well for rural going forward in the future. So I think rural will come in, and urban in any case is doing reasonably all right. So I think we should look at a revenue growth of what we have maintained till now in YTD going forward in the next quarter also. As far as margin is concerned, our gross margin has increased by 300 basis points, and part of that we've invested behind media. We will continue to do the same thing. Although that kind of a deflation that we've seen YTD will not happen going forward in the fourth quarter, it will be lesser, but part of that will be invested in media. And our media to total revenue percentages in the range of around 8%. So we want to continue the same going forward and keep investing behind brands because that is giving us results in terms of our market share gains. Yeah.
So margins can sustain above 20%, right?
Not really. We have given a guidance of the full year margin of around 19.5, and rest of the upside in gross margin will be invested behind media investments, and that is what we'll continue to do.
Fair enough. So maintaining your margin guidance. What about healthcare, hair and personal care? Can you provide some more color on the outlook?
Yeah, so in terms of hair care, we're doing very well. So both perfumed hair oil and coconut oil, we've been gaining market shares, and we've seen our secondary revenues grow at a very, very high double digit in the range of around 9 to 10% thereabouts. And the margin upside has also happened because of the benign raw material and packaging material cost. And all subsegments of hair oils have done well for us. In oral care, we've grown at around 8.1% on back of volume growth of around 4%, whereas the market is around 2%, whereas we have got around 4% volume growth, and we've got market share gains in our Dabur Red, which is our flagship brand, of around 16 basis points we've gained in our oral care. Our home care business has done also well on back of our Odonil and Odomos brand. Odomos has gained around 1,000 bips and Odonil around 180 bips market share we've done. Our skincare portfolio, but for cold creams, which got impacted by the winters, I think the rest of the portfolio of skincare is done well. The Gulabari brand has grown by around 15-16% for us in the quarter, which is a great thing. As far as the healthcare business, we had a muted performance in healthcare. Our healthcare business only grew by around 3% because of the weak winter and a delayed winter. So we've done a lot of loading of the product, but because the winter got delayed, so the offtakes have not been in line with what. Because the winter got delayed, we hope the offtakes will happen now. And so Chyawanprash broadly for us has been a flat or a muted growth. While honey, we've gained market shares of around 150 odd basis points. Honey continues to do well. The newer players who entered the honey market are also getting edged out, and honey is doing well for us. And the category penetrations are also now higher than the pre-COVID levels for us as far as honey is concerned. And so healthcare overall is good. The OTC portfolio, the Ayurvedic and the therapeutics portfolio, they continue to do very well for us. And but the winter portfolio got impacted in the season. Beverages has come back to the growth path of around 6.9% growth in the beverages now for us. And we just hope, keeping our fingers crossed, that summers is great and we are able to push out our beverage portfolio.
Okay. Mohit, since we have you, afternoon, Prashant here, tomorrow is this is slightly out of the syllabus, but tomorrow is the budget, at least the first of the two that we'll see this year. Historically, whenever we've seen, the government push, schemes to promote consumption, and general expectation is that is what needs a little bit of help, consumption at the lower end. And that, of course, is largely seen to benefit staples as well. What's been your experience, Mohit, and any expectations at all?
Yeah, I think very valid, Prashant. So we're just waiting for the vote on account tomorrow to see that. I hope it's only supportive to the rural and the masses. But generally what we've seen in the previous, that whenever elections are going to be there is always a support by the government to the bottom of the pyramid, and that will continue in the coming vote of account also. So hopefully it augurs well for the rural economy, and we've got a highly salient rural business, so that will really help us. So I think Manrega outlay and, free wheat and rice, etc., staples. So that will go a long way, because if the government gives these grants, then the discretionary spends actually pick up. If the government is not giving any grant, then the consumer's money from the wallet actually moves towards staples and less towards discretionary. So during the election year or before the election year, we will see the government expenditure more towards rural, and therefore discretionaries will actually pick up, which is where we operate in that category, which includes the value-added foods, which includes the personal care, which includes OTCs, which includes beverages, etc. That kind of portfolio, which is the space that we are present in.
Okay, all right. Mr. Malhotra, good speaking with you as always. Let's see what indeed the finance minister has in store, whether we will get that much talked about spending push from Budget 2024. Thank you for joining and good luck for the rest of the year as well. Well, let's go back and look at the screen. It's a solid looking market, 200 points up on the Nifty. The Bank Nifty